Hello everyone, welcome to my channel, The Pro Cognitive Trader. I have come with an interesting video. As you know, I have started a new series about what the share market is. This video is to tell you the story about how share market came to existence, how trading took place in ancient time, and how it evolved. Before moving forward, if you missed any of my previous videos, I request you to go back and watch them. I will leave link for those videos in the description box. Dutch East India Company was the first company to offer equity shares of its businesses to public. You can call it the very first IPO. Dutch East India Company made regular voyages to sell the goods. They started to take money from public to fund their voyages and share the profit from the sales between the people who invested money. The Dutch East India Corporation was the first publicly listed company. It founded Amsterdam's contemporary stock market. The Amsterdam Stock Exchange was subsequently founded in 1611. The Dutch East India Company was also the first company to be listed in the modern sense. It was only Dutch East India Company for several years until other companies who made regular voyages around the world started selling their shares with the promise to give dividends. The history of Indian share market dates back to 1875. Cotton King, an eminent business person, Mr. Premchand Roychand, gave birth to Native Share and Stockbrokers Association to start a stock trading business. Initially, it had 318 members. This is now popularly known as BSE or Bombay Stock Exchange. And this got permanent recognition from Government of India in 1956. It is the oldest stock exchange in Asia, and popular NSE, National Stock Exchange, started in 1992 and recognized by SEBI in 93 and started its operation in 94. This becomes a better way for businesses to raise funds. All businesses started to trade shares to raise money, and that's how area-wise stock exchanges got formed. The Calcutta Stock Exchange started to provide a market for plantation for jute mill shares in 1863. In 1894, Ahmedabad Stock Exchange was started to facilitate dealings with share of textile mills, and subsequently Madras Stock Exchange was also started in 1920. Apart from these, 28 other regional exchanges got formed for public to invest their money and to get benefit out of it, and for businesses to raise funding for their business. However, there were no regulatory body to look over these exchanges, and that's why manipulations were easy and that caused uncontrolled volatility. Stockbrokers were able to manipulate stock prices of various companies based on inside information, and there were no one to safeguard the interest of investors. Securities Exchange Board of India was constituted in 1988 as a non-statutory body. Being a non-statutory body, it had no control over the manipulations. However, after scam in 1992, it was established as a statutory body, and Security Exchange Board of India Act 1992 came into existence to safeguard the investors' interest. As mentioned earlier, before SEBI, there were 28 regional exchanges and 2 national exchanges. SEBI issued very strict criteria for exchanges to remain operational in 2012, and because of that, regional exchanges opted to close out their businesses. Now there are only 6 exchanges existed in India with a permanent recognition, and one with recognition until September 2023. They are Bombay Stock Exchange, BSE, National Stock Exchange, NSE, Calcutta Stock Exchange. Though it had permanent recognition, it is non-operational. MCX, Multi Commodity Exchange, NCDEX, National Commodity and Derivatives Exchange, ICEX, Indian Commodity Exchange, and Metropolitan Stock Exchange with recognition till 15 September 2023. Till now we talked about how share market got evolved. It is equally important to talk about how trading got evolved. If you ask anyone from earlier generation that they know share market or what is share market, a very chaotic picture might come to their mind that people are shouting at each other with some hand signals. This was basically a trading system known as open outcry system. In this system, brokers come together in a designated area in exchange known as a pit. In the pit, broker used to shout, and by means of hand signal, buy and sell used to happen. And this was the main method used in communication since start of Amsterdam Stock Exchange in 17th century. This started changing in 20th century by use of the telephone, where traders or investor used to call broker to buy certain quantities for certain price. Once executed, broker used to give confirmation to traders a certain quantity was bought for X price, and by the end of day trader or investor needs to pay the amount either by check or by electronic transfer.
And subsequently, this system was also replaced by an electronic trading system where now trader can see the charts on their computer and decides on price for which they want to buy or sell.
I will be coming to you with many more such interesting videos. Stay tuned for more such videos. Please like, share and subscribe and comment to let me know what other topics you want me to cover. Happy learning!